This is our Forex blog for November 19th, 2012, and I'm spending all my time now trading and doing automated trading systems, so I had to leave two versions of a software up for my own trading and also for running systems. So I'm going to do today's blog a little differently. Most people like to trade the euro dollar. There's a bunch of tools in our software that can help you in determining whether to take a trade or not. I'll go through them today relatively quickly. One of them is the containment bands. This shows you how far in this case, euro dollar moves based on the last 20 days. What's the maximum volatility for different times of the day? And these plot bands around the price, and it also shows you what the hourly moving average is. Typically, you want to trade with the trend until the market moves too much, and then you can look to do counter trend trades. And you also can select DSP if you want to have this more readily be faster, catches up a price significantly more. I usually put on the 1.5, 2, and 3 bands. Typically outside the 3 bands there's 95% probability the market doesn't reverse. Let me change that to digital signal processing based for the other ones. Forgot to do that. Alright, so you can see this white band tagged it today, and that was the high of the day. Most of the time the white band, probably 80% of the time the white band is the end of the move, and then you're going to get a reversal. The green band, probably 90% of the days it doesn't even get hit, and usually within an hour when it hits or goes 15-20 pips max over these band, you'll get a nice reversal. Another statistical tool you can use is called our range projection, and what this does is it lets you look at each bar, each hour, every 4 hours, whatever, and it shows you how far it moves on average in the past, and it also lets you see standard deviation. So you can put, let's say, the 240 minute on here, one standard deviation, and it will show you how far it normally moves every 4 hours. The top orange band is the average high, the blue is the low. As price moves up, you can see the average low moves up with it. Sometimes it hits the upper band, pulls back, volatility is so high, it will now hit this band or this 4-hour average and then get a nice bounce off of it. As you can see, if it explodes up like this, there's no way 99.999% of the time it's going to come all the way down to the way the 4-hour low starts. So that's why this band, these hourly range projection high and low, adjusts itself. If the price falls, like you can see just happened in the euro dollar, the average high gets yanked down with it. Now it's 25-30 pips lower than what it was. Actually, that's this orange line right here. It's at the 1 standard deviation level right now. So if you're trading a euro dollar, you could look for a sell. Now this is a 5-minute chart. I prefer to trade with range charts. So I'm going to put a 5R range chart on this, and what that means is it basically showcases every 5 pips the price moves, there's one new bar. And during active times there's a ton of bars, and during slow times you can see these are half-an-hour period apart. During this time right here there's very few bars. During this half-hour period right here there were a lot of bars, a lot of volatility. And so it really gets rid of the noise. And the primary benefit of this is when you have a strong currency, typically you can buy a pullback from 2 up to 5 bars. When the euro dollar is one of the strongest pairs, you can buy a 2-bar pullback. Once it has 1 green bar, you buy it when it goes 1 pip above that bar's high, and then all you do is simply put your stop 1 pip below the low, and you draw your fibs off that previous swing, and you have an idea where your profit target is right here at the 1.382. It also happens to be the 4-hour statistical high. So if you bought this right here at 27.85, you're likely to make 18 pips while risking, you're buying at 84, your stop is at 77. You can clearly see it's significantly less than a 10 pip stop. And the key to trading is having obviously more wins than losses, or much bigger wins than losses. And you can use chandelier stops, Fibonacci profit targets, or the old parabolic to get out of the trade. On a range chart, you might want experiment with the settings, but 2 to 2.5 multiplier, and you can also put the parabolic stop on there, which in some cases, the longer you're in the trade, I like this as a better exit. It's a little bit wider stop to begin with, and it gets progressively tighter, as you can clearly see on this chart. As the price is going up, notice the chandelier stop is right there, and this one's farther away. The longer you're in the trade, this one yanks up, and it actually got triggered before the chandelier did. And that's often the times the case, especially for big moves. And notice also I took the chandelier and changed it to 2 times stop. You could also just simply use the chandelier to know what the trend is. If it's above the hourly and it's trending up, you look for a 2-bar or 3-bar or 4-bar pullback, and you buy with your stop right here. So in this case, if you bought this at 83, you can put your stop really, pip underneath the chandelier at 79. You're risking 4 pips. Same thing with this one right here. So here's a pullback. You had a tiny loss, another entry. It went up a few pips. You can always move your stop up once it starts going your way. And some other tools that you'll find benefit you and improve trading is the FX Power Index. This measures the percentage of currencies trending up or down, and it shows you on every single bar. FX Power Index. You might want to see what percentage of currencies are above their 15-minute bar moving average. And this works on all the euro-dollar pairs and all the dollar pairs and shows you the percentage. So when you saw this going up right here, and then you had that 2-bar pullback, guess what? 81.81% of euro-dollar pairs are going up and dollar pairs are going down. That's pretty significantly strong. In fact, it was as high as 90.9%, which means basically the euro's going up versus all of the pairs, or all of them minus 1. Basically, of all the major pairs that we look at, the euro dollar is either, well, it's the second strongest of all. And so therefore, a 2-bar pullback is very high probability. It's not up statistically too far. It's not outside our bands. And you can buy these and catch, this multi-pip movement up. And notice also before it really started falling later today, notice our FX Power Index went red, and drastically red, right here. 90.9% of the pairs are trending down, and then afterwards you can see it fell from 28.10 all the way down to pretty much 27.70. It fell 40 pips. It was extremely weak. And so if you're trading this and you're looking to buy a 2 to 4 bar pullback, well, guess what? This is one of the weakest ones. So when it's going down with incredible weakness, you sell it, and most times the trend's going to continue. Same thing when it's going up. Now the first trade was a much higher probability trade because, for one, we're above the hourly moving average right here, which means that's a major resistance area. It tends to go up when it's above it, and when it's underneath the hourly, it tends to go down. Obviously, when it gets up too much, statistically too much, and it's outside our 4-hour average high, it's even at the 1 standard deviation high, I tend to scale into relatively big trades at the white band, and especially when it's above the 4-hour. This is a 4-hour high, average high right here, 28.02. This is a 1 standard deviation high, 28.14. This level and above, and especially when it's above our 2.0 white band, containment band, it's a good place to scale into a trade. Sometimes it'll go up 15 to 30 pips above that, and then fall 15 to 30 pips. If you scale in progressively, you can kind of get into a trade where if it pulls back 6 or 7 pips, you're at break even. If it pulls back 20 pips, you've made 10 to 13, 15 pips on a very big position, and it makes it worth taking counter trend trades. In my experience, it's almost impossible to pinpointly pick the absolute high or low of the day. The only way you can conceivably make money doing counter trend, which during the US session is oftentimes the only trade there is. You don't want to buy up here at a likely reversal point. You want to do a counter trend trade. You want to trade with a trend until it moves statistically too far, and then you want to look to do counter trend. And whether you do the counter trend and scale into a trade, or wait for a pattern-based trade, such as a double top or another false breakout above the previous high and then it comes back down, or sometimes you'll have a 1, 2, 3 pattern kind of like this one where it doesn't quite make the previous high, as you can see. And typically, if that's the case and it's less strong than it was before, you can get into a reversal and it breaks that trend line there. Now I'm showcasing tools I haven't gone over in the Forex blog for a while. These are some of our older tools. One of our latest enhancements is a FX Build Your Own Trend, but it's only live, and if I brought it up right now, you'd only see the latest bar, not past bars. So that's the reason I'm going over some of these past charts using some of our older tools. These older tools are in the FX Build a Trend, which allows you to set any weight, any settings you want for all of these tools and see a composite, an average of all the indicators. So one of my favorite ones, and it's really almost impossible to be beat, is the FX ADX trend. And this measures, using ADX technology, all the euro-dollar pairs and all the dollar pairs. And I like to use a 9 pair because it's significantly faster. Anytime this is at or above the 14 level, you can pretty aggressively buy or sell. If it's green, it's obviously very strong. You can see this last move up right here had even more strength than before, and then it exploded up. Notice this move right here. If after 355 you're looking to buy a pullback in this, let's scroll back to that. Here's 355, and typically we're looking for 3 and 4 bar pullbacks. So we have 1 bar, 2 bar, 3 bar, and I love 3 bar to 5 bar pullbacks that have a wick. This never went underneath the hourly. Here's the first green bar that you have after 3 down bars. When it goes 1 pip above the high here, you go long. Now in this case, the trade never really developed. Your stop would be a pip or 2 underneath the low. You can see it kind of went up right here, closed down. Anytime that happens, I'm kind of raising my stop as it goes up. And you can see as it went up, there was 1 bar here with a lot of strength. Then right here, it doesn't have so much. So you might want to move your stop underneath here and get a break-even trade. You get a 2 bar pullback again, 1 green, you go long again. You never know what's going to happen after you get into a trade, but you can see whether the strength resumes or not. This is from 5 to 7. Notice on the 5-minute chart from 5 to 7, there's no ADX trend strength. So, you can quickly move your stop to break even or a few pips below, and you might have made a pip or 2, lost 2 or 3 pips, but the point is you never really got stuck. Now, going back to this chart, the next major move was to the upside at 9 o'clock. Let's say you missed that move up right here, but we're looking to buy again after 9 o'clock. So guess what? Here's 9 o'clock. It goes up. Here's your first pullback. This is the one we went over before. You get into it, and you can see it went up from 27.85 all the way up to 28.20. Nice 35 pip move, and it was extremely strong the whole time, both in terms of the percentage of currencies trending up above their 15-minute average and the ADX, which measures the intensity. As this thing was going up, it stayed extremely strong. That doesn't mean you want to stay in it forever. When it hits a likely reversal point, like I would have probably myself, in all honesty, would have got out of half my trade here at the whole number, which tends to be major resistance. There's a lot of sell orders. And it also happened to be the 4-hour statistical high, which most of the time price doesn't really explode through. And I would have used a trailing stop on the other half. So I would have got out more than likely at the upper band here on the other half. Let's just round down to 28.15. And I would have got out of the first half around 2800. My average exit would have been 2807. And I would have been in this trade right here at 86. So that's a 21 pip win while risking only 6 or 7 pips. So those kind of stats, you can be right 40% of the time and still make money if you have 2 times bigger wins and losses. So that's it. That's the secret to trading.